Chris, pretty wild times, literally the mirror image from exactly a year from now. So what do you say when people say, what's going on? What's your answer?
There's a few things. First, as you guys have talked about all day, there's broader risk-off environment throughout the markets. Your riskiest assets tend to get sold off most in a risk-off environment. That's definitely happening with crypto. We can come back to that. Ethereum has been going through a broader deleveraging from the ICO boom from last year, where funds were raised and then those funds were used to raise. And it's kind of we could think of it as a cyclical deleveraging. And then the third thing I would say, Bitcoin was forming support at 6,000 for about 3-4 months here, and there's a lot of turbulence around a child of Bitcoin called Bitcoin Cash, which has also forked, and so that has perturbed the markets and broken that technical indicator, and so now we are searching for a new bottom in crypto land.
When you're looking at these technical indicators, though, I mean, what's sort of the main metric that you use to sort of place a value on where Bitcoin should be? I mean, it's kind of a hard thing to sort of price.
It's very hard, and it's actually particularly hard with this asset class because it's so new. You think about most asset classes, we have standard models that we use, and then we bicker over the inputs. Those are our assumptions into the models. Within crypto, we are creating the models as we speak because this asset class has only been around for 10 years, right? And so I've put out some ideas around models, other people have put out ideas around models, but there's no consensus model that the market can put information into and say, okay, this is where your assumptions are different from my assumptions. Everyone's just disagreeing over all the models and the assumptions to begin with.
Explain further the deleveraging you say we're seeing in Ethereum, because I think there's a big point. Last year, of course, and early part of this year, just an incredible explosion of ICOs. So what does the reverse of that look like?
Sure. So if you think about how an ICO went about, right? Maybe so I created an asset of supply 100%, and I sold maybe 20% of that for Ether.
Yeah.
I then created 80% of asset supply. If I used that extra 80% and invested in another asset where then I did the same, it starts to have this fractional reserve nature, where as you start to sell, the true fundamental value that was created collapses very quickly, as you would see in a deleveraging environment.
Chris, for many, the true fundamental value of crypto in general needs to be built upon actual usable applications when it comes to these businesses raised money to build products.
Yes.
At the moment, it remains speculative. At what point do we move away from just purely speculative assets into actual forms of product?
So I think there are true uses and fundamentals that we can point to within the crypto markets right now. Bitcoin, for example, continuing to process $1 billion daily using its blockchain. It's at around $1 million a minute. So it's actually punching above Discover's weight in terms of transactional utility that it's giving to the world. This continues on despite what's going on with the market. If you look at what Ethereum did, Ethereum was a pretty amazing capital financing platform last year. It raised a lot of money for a lot of companies, irresponsibly used, but still a utility provided to the world. You look at something like MakerDAO, something more exotic, it's actually a credit facility, which has issued 9 figures in loans now. And so I think we just have to look at the areas where there's true traction.